Hello, entrepreneurs. Joe DiChiara, CPA extraordinaire, coming to you live from downtown Metro Manila for another Learn to Earn quick business, tax, and marketing tips in 5 minutes or less. And today, this is going to be a quick one, folks. We're going to talk about self-employed retirement plans, and I have a little cheat sheet over here that I'm gonna look at. But this is what happens when you are self-employed. You have several different options on tax deductible pension plans, and this is important, especially if you're in a high income tax bracket. I just went through this with the client of mine, and his financial advisor sold him on doing a Roth IRA. Big mistake, big mistake. And let me explain. A Roth IRA, the main benefit of a Roth IRA is future tax-free withdrawals. So as you get closer to retirement age, it becomes less attractive because the time frame of you having those gain potentials goes down. A Roth IRA is better for younger people, and that's just my own opinion. Also, you have to take your current tax situation into account. So in his situation, he still had high income. He made over $200,000 for the year, and he needed he needed a current tax write-off because he's in a high tax bracket. So what I advised him to do was recharacterize the Roth IRA into a traditional IRA. Now, a traditional IRA is not necessarily a self-employment IRA. If you're just an employee, you can do a traditional IRA or you can do a Roth IRA. But today I want to talk about some of the best retirement plan tax deductions. And if you're watching live like Deck is, hello Deck, how are you? You can give me a hashtag live. If you're watching the replay, give me a hashtag replay. And the reason is when you do that, you become part of the trail, part of the conversation. So if anybody asks a question or answers a question, I see it, and so does everybody else in the conversation. So let me start by talking about my favorite self-employed contribution, and that's a SEP IRA. Why is it my favorite? Because you can get a big tax write-off. You can write off up to 25% of your self-employment income. Now, there's a maximum. You can contribute up to $66,000, but most people don't contribute that much. That's a lot. But I've saved my clients a substantial amount of tax money with the SEP. So we're getting on the 5-minute mark. You can also do a solo 401k. Again, there's limits to that. There's limits to every pension plan, but you can do up to $22,500. And then you also have a simple IRA. What that means is a savings incentive match plan for employees. There's also a couple of other ones that I don't really love. But if you have any questions on this or any other matters, please feel free to book a chat with me. All you got to do is go to Time with Joe. And that's my story. I'm sticking with it. God bless, and I will see you again tomorrow for another exciting episode of Learn to Earn.